If you are a Muni bond investor, how worried are you about these rising tensions across the country? For more perspective, I want to bring in Matt Fabian. He's a senior analyst and managing director of Municipal Market Advisors. Matt, good to have you back on the program.
Hi, Betty.
And if I was holding Muni bonds there of those states, should I be worried?
Well, the market has actually been stabilizing a bit in the last couple of weeks, but this news about the protests and such is relatively new. You could expect munis have been dealing with some selling pressure out of the mutual funds really over the last 14 weeks. So this should reasonably increase that selling pressure. I mean, after all, you have the governor of Wisconsin calling the state broke, right? So I mean, that doesn't really instill confidence in bondholders.
So if I understand it, you're saying that the muni bond markets were actually stabilizing ahead of these events then?
Yeah, no, absolutely. So, yields have been falling, spreads have been tightening. Actually, traditional muni institutional buyers have been buying. So it's been getting a little bit better into this. So
if you were watching muni bond yields and you were watching the muni bond markets, you would have been taken totally by surprise by what's happened then, no?
Once again, we're not doing exactly what people expect us to do. I mean, that's right. The thing about this is that the state of Wisconsin, right? I mean, even if there isn't a functioning legislature, the state still pays its debt, right? The bondholders have a priority lien on all state revenues, and there's something called a continuing appropriation, meaning that debt service is paid even without an action by the state legislature. So debt service is not really in question at all, and that's how. And there are similar laws in effect in most of the other states. So this is happening at the state level, so bondholders should be fairly well protected, at least in the near term.
So Matt, if you're a bondholder, you're not worried about default?
No. But longer term, you do have to think, is this effort by Republicans? You actually have a couple things, right? First, the cost-cutting agenda clearly is nearing or is close to some kind of political floor, right? So that trims state managers' flexibility in balancing budgets if they can't cut like they expected to. Longer term, you have to think about, is this, on the Republican side, is this a measure of fiscal prudence, or is it an anti-tax sentiment? Because if it's the former, in general, it's good for bondholders. If it's straight up anti-tax, then longer term bondholders may be facing some pressure as well.
Well, what do you think it is?
I actually tend to think it's the latter, and so I think that in this, looking at sort of very aggressive anti-tax sentiment across the country, in general, political volatility is bad for bondholders. Bondholders like stability, willingness to pay, that sort of thing. I think that you need to be a bit more cautious, and and longer term, this is one of my fears for the market, the political turnover of the country into a more anti-tax activist sentiment. So,
right, so
it's something to watch.
So it's the anti-tax sentiment that's really what for these bondholders to watch out for. Matt, thank you. Matt Fabian of Municipal Market Advisors talking about the turmoil going on across the states.